Are you seeing signs of inflation beginning to increase?
Let me answer that. Greg can give more. We're seeing very substantial inflation. It's very interesting. I mean, we're raising prices. People are raising prices to us, and it's being accepted.
In a world where the value of money seems to erode with time, how can you ensure your hard-earned wealth retains its worth? Welcome to our channel. In this video, we'll unravel the secrets to protect your money from the stealthy thief known as inflation. Before we dive into strategies, let's demystify inflation. Picture this: a silent force that steadily erodes your purchasing power. It's like a hidden tax on your savings, silently stealing your financial security. Diversification is key. To combat inflation, you must diversify. Just like a skilled chef doesn't rely on a single ingredient, you shouldn't rely on a single investment. Imagine you've invested solely in a single company's stock. If that company faces financial trouble due to inflation's impact, your wealth could be severely affected. By diversifying across asset classes like stocks, bonds, real estate, and commodities, you spread risk. If one sector underperforms, others might thrive, creating a balanced portfolio that cushions against inflation's blows. Diversification also maximizes returns. While some assets may struggle, others may flourish, helping your wealth grow. Invest in tangible assets. When inflation strikes, tangible assets shine. Take gold, for example. Throughout history, gold has held intrinsic value, making it a go to hedge against currency devaluation. Imagine holding gold as the value of paper currency declines. It's like holding a piece of timeless stability. Similarly, real estate properties have proven their mettle against inflation.
They're the businesses that you buy once, and then you don't have to keep making capital investments. You do not face the problem of continuous reinvestment involving greater and greater dollars because of inflation.
As the cost of living rises, so does the value of properties, safeguarding your investment's worth. Collectibles, too, can appreciate significantly over time, offering both aesthetic pleasure and potential profit. The power of stocks. Stocks can be your fortress against inflation. Imagine you're a shareholder in a well-established company. As the company grows, it generates higher revenue and profits. These earnings often outpace the rate of inflation, boosting the value of your investment. Plus, strong companies tend to adapt to economic challenges, making them resilient in the face of inflationary pressures. By investing in carefully selected stocks with strong fundamentals, you harness the power of growth and resilience, providing a counterbalance to the erosion of purchasing power. Bonds might not sound thrilling, but they're a smart defense against inflation. Traditional bonds provide fixed interest payments, but their value can be eroded by inflation over time. However, inflation-linked bonds are designed to combat this. Imagine holding an inflation-linked bond. When inflation rises, the bond's value adjusts accordingly, protecting your investment's real value. These bonds provide a reliable stream of income while ensuring your purchasing power doesn't dwindle. Embrace real estate. Real estate isn't just about location. It's also about inflation protection. Imagine you own a property in a growing neighborhood. As demand increases and construction costs rise with inflation, the value of your property climbs. Plus, real estate offers an income avenue through rental payments, providing a steady cash flow that often appreciates over time. By investing in real estate, you're not just owning a physical asset, You're securing your wealth against inflation's erosive effects. Generate passive income. Passive income streams act like a moat around your wealth castle. Imagine investing in dividend, paying stocks. The company's success generates regular dividend payments, which can increase over time due to inflation. Similarly, rental income from real estate properties remains relatively stable, while its value typically rises alongside inflation. Bonds, especially corporate bonds, offer interest payments that can act as a steady income source. By creating these passive income streams, you're building a protective layer against inflation's erosion. Be wary of cash. Cash might feel secure, but it's a silent victim of inflation. Imagine stashing away money under your mattress. Over time, that cash loses value.
You're looking for something where you put out money now, and that asset that you buy gives you back more money over time. Now, the problem with commodities is that you're betting on what somebody else will pay for them in 6 months. The commodity itself isn't going to do anything for you.
Inflation decreases your purchasing power, making the same amount of money buy fewer goods. While it's important to have liquid assets for emergencies, consider keeping only a portion of your savings in cash. Invest the rest in assets that have the potential to outpace inflation and preserve your wealth. Keep learning and adapting. Inflation fighting strategies are like a puzzle, constantly evolving and requiring your attention. Imagine you're a financial detective, staying updated on changing market trends, economic indicators, and innovative investment options. By expanding your knowledge, you adapt your strategies to stay ahead of inflation's curve. Whether it's exploring new asset classes, adjusting your portfolio, or tapping into emerging markets, your commitment to learning becomes a powerful tool against financial uncertainty. As we wrap up, remember that the battle against inflation is ongoing. By diversifying your investments, embracing tangible assets, and staying vigilant, you can protect your wealth from the ravages of time.
The best investment, by far, is anything that develops yourself. The best thing you can do is to be exceptionally good at something. If you're the best doctor in town, if you're the best lawyer in town, if you're the best whatever it may be, no matter whether people are paying you with $1 zillion or paying you, they're going to give you some of what they produce in exchange for what you deliver. I mean, they can't actually be inflated away from you. Yeah. Nobody can take away from you the talent you have. And it can't, not taxed,